Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock in which we are going to take a look on the Citibank's earnings report for the first quarter of fiscal year 2024. In the last quarter, the Citi Group has done well but not as well as expected, and that is one key reason why we are seeing the stock price going sideways to downward in the last few trading sessions. Because if we consider the share price performance of the Citi Group, Citibank over the last few months, particularly after the November 2023, you can see that its price has traveled all the way from 40 odd price level to touch just a notch below 70 mark. That presents more than 50% increase in the valuations of the Citigroup in the market, and from those levels the share price is now trading slightly on the lower side, and I feel this change in sentiment is likely to prevail for next few weeks at the minimum, if not more. And then, in course of time, as things stabilize and as we get more clarity on the business front of the Citigroup, we will get a fresh set of data points to decide whether to go for a long trade or to go for a short trade. First, we look at its quarterly report. The revenues are not much different from what they were a year back. There is a slight decline, but it's not statistically significant. It's minor deviation, so you can't really read much into that. The only thing you can take note of is there is no substantial growth, there is no strong growth on the revenue front, and also on the net profit side, there is no growth, rather there is significant decline. And why this significant decline has happened is equally important to understand. There has been increase in the cost of capital, there has been increase in the running cost of business, and these both the factors have pulled its net income down significantly over the period of time over the year, and that has impacted its prospects for near term, I feel, because in anticipation of revenue growth and the net profit growth, there was bullish momentum in the stock price, with most of the shareholders and the market participants being quite hopeful of this turnaround in the Citibank's business strategy after the simplification initiative it took in the last financial year. But that doesn't seem to be paying off much. There has not been much change which can herald a efficient business environment and leaner, meaner business organization in the near future. So it is likely to take time. The Citigroup's initiatives to cut cost and make its operating margin better is likely to take much longer than earlier anticipated, and that is also one reason why the shareholders and the market participants now thinking to halt this frenzy in the market and take a informed and also take a modest view of the developments in the Citigroup's initiatives. Now, if we just read the numbers, we will get a very good idea of what is happening on the ground. You can see that for the revenues, there was decline of 2 percentage point, and there was at the same time increase of operating expenses of around 7%. So this has impacted its margin, the operating margin, and Along with this increase, there is also increase in net credit losses of 77%. That's because the net credit losses have gone up from 1.3 billion to 2.3 billion, and that's a significant increase in these provisions. The operating expenses we have already considered, which are now lower quarter-on-quarter, but still significantly higher year-on-year. So the company is getting better, the Citigroup is getting better, but it is not getting as better as required or anticipated in the most bullish scenario. So that is something which we will have to keep in mind. The net income is significantly on the lower side. It is 27 percentage point lower year on year. It is higher in comparison to the losses of 1.8 billion Citigroup had suffered in the fourth quarter of fiscal year 2023. So from quarter on quarter perspective, there is tremendous increase, tremendous and significant improvement. But if you then compare the same figures in a year on year analysis, you will see that the Citigroup's earnings are still a notch below the prior year's earnings, and it will have to do a lot more heavy lifting to get it in the shape and eventually cross these prior earnings high. Book value has been listed. The book value is growing for last few quarters. The tangible book value per share has also grown. Now all the details are provided in the report. You can always read it fully at your own time. Whenever you have free time, you can go through the report to get a clearer picture of the developments in Citigroup's business operations and how it plans to achieve more profitability, optimum setup for the organization to sustain and prosper. We don't have a cash flow statement provided to us in the report. We do have individual segments income statement, but that's not really going to be much helpful for us to figure out how the company is spending its cash, where it is generating cash from, how much it is generating cash, and where all that cash is going. So for that, we do need cash flow statement, but we don't have that. But some key items have been listed here. One is the dividend distribution and the spending for that, which is significantly higher. But apart from that, we don't really have much details on the cash flow side. Now we turn our gaze to the technical side of the story. For that, we can look at the Citigroup's share price moves over different time horizons. Depending on the what kind of trader or investor you are, you can then choose the candlestick time period appropriately and see how things are on that time frame, on that candlestick time period for the particular time frame. Now, from the short term to medium term to long term perspective, we will have to change the candle period time, and accordingly, we will get this trajectory plotted on the chart. For the hourly candlestick time period, we have seen then since this peak established little above 63 USD per share, its trajectory has turned bearish. It has been making lower lows and lower highs since then. On the day of its earnings release, there was this spike in the stock price of the Citigroup. We saw that it started on the higher side and made a slightly higher swing high. but it couldn't really sustain the momentum, and by the end of the session it was trading lower, and it hasn't really changed the course over last few trading session. It is still in a bearish mode with its decline continuing every day for last few trading session. In today's trading session, it did find some support on the lower levels, but it can only be construed as retracement of the prior decline. We can't really say that things are changing, not yet. We will have to give more time, and maybe eventual, if it doesn't really decline and starts to show the signs of the revival, we can indeed take our chances. But for the time being, at least for the next few trading sessions, we will have to adopt a cautious view and better keep in mind to look for sell on rally approach trades, not on buy on dips approach trades for the time being. So in next few trading sessions, much more clarity will emerge, and if the formation remains of lower low and lower high, you can indeed adopt sail on rally approach. But if there is signs of turnaround, and eventually if the formation turns to higher high and higher low, you can indeed adopt a buy on dips approach. But for the time being, given this formation remains bearish, it is better to go with the flow and keep looking for short selling trades. Now if we have to consider the developments from medium term perspective, then I think the candle period of daily is going to serve our purpose. On the medium term, if you look at its share price, which made bottom around the end of October, and from there on, there has been this rally with these gains being quite significant and sustainable over last few months. It has gained more than 60 percentage points from the low to the high, and right now it is sitting much closer to the high than to the low. And for next few trading sessions, I think the momentum is still bullish. Of course, you will have to allow it to consolidate, and maybe eventually, if there is no sharp deviation on the lower side, you can eventually adopt a buy and dips approach. But for that, the share price doesn't really need to deep and decline below the current price trajectory, current price band of 55 to 57, as long as it is able to hold close and above the prior swing low. I feel we will have much more reasons to believe in the possibility of it continuing to grow and continue to rise after making swing low, the retracement low. But if it declines much and doesn't really find support closer to the prior swing low, then in that eventuality, I think we will have to give up on this bullish trajectory and make peace with the possibility of it turning corner and turning bullish. But if it is showing the signs of finding support closer to the prior swing low, then I think we can indeed think about going for newer long trades as well. And in course of time, we can expect the city quick stock to break and rise above US dollar 64 levels in coming weeks. Now let's turn our gaze to the long-term prospects of the city group. This rally, which I talked about, started from these 40 odd levels and went on till all the way above 60. Now, for last few weeks, we have seen this decline, and this decline, I think, can still be considered as the part of retracement as long as there is no significant dip not below the 50 mark, we will have this formation of the long term, which is still conducive for the bullish trades. And only thing which we need at the current juncture is the time for the stock price of the Citigroup to consolidate first before we can embark on a second move, second leg of the ongoing bullish run. But I don't really feel that is going to happen anytime soon. It will take time because we have already seen that on the fundamental side, on the business side, the revenue growth is not there. The revenues declined in the last quarter, and also on the net profit side, the growth wasn't happening. So that factors need to be kept in mind as well, and taken together. The technicals and fundamentals are somewhat sober. We don't really have reasons to jump in straight away. We can give it time. We can see how the business environment for the banking group as a whole is evolving, and then consider the performance of the city group over next few weeks, next few months, and its share price trajectory for the given period, and accordingly we can take informed trading decisions whether to go for a long trade, whether to go for a short trade, or whether to simply sit on the sidelines. And depending on the price formation, we will be in a good position to judge for the trade purpose, for the trading purpose, so that we can get a higher probability of making money than losing money. So for me, I think the Citigroup is not really a great bet at the current juncture on either side, nor it is a good choice to short or to go long, and it is simply a candidate for adopting a wait and watch approach. And in course of time, you can of course revise your views depending on how things have evolved. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I will be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day ahead. See you next time around. Till then, goodbye.